Wanted to take a look at Qualcomm today, QCOM being the ticker symbol, and want to look at it from the perspective of value investing. Now, Qualcomm is slightly undervalued when you look at it from a relative basis, given their next 4 quarters earnings per share and current price. However, I believe that the stock market itself is overvalued, and probably when we get the next earnings outcome from or results from NVDA stock, we could see an adjustment in overall the stock market. At the same time, the U.S. economy is starting to slow down. So when you look at Qualcomm stock as a value investment, there's still a little bit of juice in the or gas in the tank, but likely we will see the stock market moving lower, and that could give a solid opportunity to buy Qualcomm as a value investment. I start everything with the economy. The economy is slowing down. Qualcomm, given the opportunity in an expanding economy, would perform well. We'll probably see QCOM stock moving lower. Let's jump in. I'll break down the numbers for you, show you what I'm looking at, and why I think QCOM would be a good, solid value investment. Let's jump in. Here's a look at QCOM stock. As you can see, all the way over on the left, we got information on their latest financial numbers. The next one comes out, I think, August 18th, somewhere in that time frame. What to expect? We got better than expected results from Qualcomm. The stock had been struggling to move higher, but has obviously moved much higher since then. If you take a look at the bigger picture, it had been Qualcomm stock all the way through 2023 had been kind of stuck in a range. Like all stocks, Qualcomm stock, of course, has shot up through 2024. This being a technology stock, of course, kind of falling in line. And again, I'm start all my analysis basically with the economy. The economy is slowing down, but the stock market keeps going higher, and it's relatively just a handful of stocks that's really pushing this. Of course, we've got NVIDIA with the AI craze right now, but NVIDIA stock itself overpriced relative to future earnings. The problem with that is every time they release something, or that problem with that kind of analysis is every time they release something, they say, yeah, and then we blew out that analysis and it's going to be even better going forward. So it's kind of hard to keep up with NVIDIA. But what happens if that particular stock misses? We get information on them, I think it's August 15th, that we'll see the next release for NVIDIA stock. If they miss, if they slow down, which it is a probability because they're not going to be pulling in revenue at record rates quarter after quarter after quarter after quarter. Eventually they're going to moderate that growth. And that's it for the stock market, and that's it for Qualcomm stock, because this is sort of a guilt by association. They're being picked up as well. But there's still a lot of value left in Qualcomm stock. As a matter of fact, if you look at it, if you compare QCOM stock to the benchmark US 10-year Treasury rate, it is underpriced. QCOM stock is undervalued on a relative basis. But if we get the opportunity to buy Qualcomm stock in an economy that is contracting because of what the Federal Reserve is doing, when the Qualcomm does turn back upwards, this is a solid value investment. Let's break down some of the numbers. Total equity about 24.47 billion in total equity. Market capitalization about 232 billion. You can see the shares outstanding and share price. And then finally, enterprise value, market cap less cash plus liabilities, enterprise value about 247 billion. Breaking down the numbers, price to earnings, price to sale, price to cash flow, and price to book. Here is a breakdown of all those. Price to earnings, their price has been moving higher relative to earnings, as you can see here. Qualcomm kind of fell out of favor. Now that's starting to come back into favor, and you saw the stock price and how much it's accelerated. QCOM stock has moved higher. Price to sales, again, price on a relative basis is moving higher, more so than, say, the rate of sales. Price to free cash flow, kind of remaining right in line with itself, hasn't really kind of moved up or down on that metric. Price to book, they don't really necessarily use their book too terribly much, but maintain it's at the highest point it's been in about 2 years. Now, price, return on assets, return on equity, and return on invested capital. These numbers are pretty solid, but they're declining, and this has more to do with investments that they did previously playing out over the past couple of years. Return on equity, again, another declining number, and this is kind of getting into where more moderate numbers are for them. Return on invested capital, 22.78 being there. All right, Qualcomm revenue. Here's their quarterly revenue and expectations over the next 2 years. So Qualcomm itself, here's a look at a broader look going all the way back to 2020 on an annualized basis. 2023 saw some declines from the 2022 peak. Then year after year, 2024 expectations 38.3, 2025 42.4. So although they've not cleared revenue peaks that they had previously, they're continually adding more and more revenue from where they are. And for me as a value investor, this is one of the first metrics I'm looking for. I'm looking for a company that continues to expand revenue. And of course, AI, there's probably going to be a lot of input from that division and what Qualcomm could do. This is going to accelerate a lot of technology stocks across the board. Qualcomm certainly doesn't have necessarily the monopoly on this. They're going to go with the flow with that and probably not outperform or underperform. Net margins. Their net margins are solid, 24.2% net margins for the latest quarter. The thing is, net margins for the broader stock market is only about 10.5 to 11.5% on average. Now, this is the S&P 500, but you get mining companies in there, you get energy companies in there, which have lower net margins per se. Still, for 24.2%, that's huge. Earnings per share, solid return there with earnings per share. But what I want to know is, going back to the chart we had with projected revenues, what will earnings be? Now, these are earning estimates for Qualcomm. Earnings per share, QCOM stock, $9.95 for this year, 2024, $11.34 for 2025. How does that break down? What is yield? The next 4 quarters, analysts expect Qualcomm stock to come in at about $10, a little over $10, $10.08. Given the current price, this gives Qualcomm a yield of 4.85%. Your alternative, the benchmark Treasury rate right now, sort of the safest investment you can get into, 4.3%. Now for me, again, the U.S. economy is slowing down. We're getting that information. I believe the Federal Reserve is getting it wrong again. Not the first time. I don't think they've ever really gotten it right, to be honest. They've left interest rates too high for too long. They should have probably already started to make their moves given the information that we're starting to see. Employment, inflation, these are lagging indicators. And I didn't believe that they would have had to have lowered interest rates going into this year. But now I'm starting to look at things as we get closer to the end of year, that employment declines, unemployment rate moving higher, is going to accelerate going into the end of the year. So the Federal Reserve is going to have to lower interest rates rapidly all through 2025. It also could be that it takes a while for that to really take off. I expect that the Federal Reserve will lower interest rates slowly, and then all of a sudden they're going to have to rush. Given that, I'm putting a lot of what I'm doing into, I've been buying a lot of TLT stock. TLT stock, of course, is the Treasury Bond Price ETF. I've been doing pretty well with it over the past couple of months. Got into it February, March, and April. And I expect that will play out over a longer period of time. Qualcomm, the economy slows down because the Federal Reserve is in a rush later on to lower interest rates. 10-year treasury, of course, is going to move lower, but the Qualcomm stock will probably move much lower as well. Same thing with their earnings per share. So any kind of pullback with QCOM stock is going to be probably a solid opportunity to get in once the economy sort of mellows out, in the sense that all of the losses for employment have taken place and the Federal Reserve has shifted to monetary policy to get the economy moving forward again. I don't necessarily think we're going to be seeing a recession per se. What I think we're probably going to see is a slowdown that is rapid, but probably won't happen for about 2 or 3 more quarters. So for QCOM stock, there's still time, as long as NVDA doesn't capitulate starting in August or maybe in November, their next earnings release afterward. We'll see when that really takes place. But I see NVIDIA as being way overpriced. The whole stock market itself is sort of being pushed by some of these stocks, but that they're way ahead of themselves and they will correct. This would correct QCOM stock. Same thing with the Federal Reserve having to make their moves, say in 6 to 9 months, when they're finally forced to pull interest rates lower rapidly. I think it's going to be a slow process. Then it's going to be sort of an avalanche when they start to make their moves. That's when you should be looking at value investments and asking the question, okay, how can QCOM perform in an expanding economy? We're not in an expanding economy. Time to sharpen our pencils and get involved. I like QCOM in the long run because I think they're going to continue to increase revenue after we maybe see some kind of contraction. Look at their margins, 24%. That's solid. This is a company that can perform inside an expanding economy. But we're about to see an economy that is contracting somewhat. Make sure to hit the like and follow button. We'll see you in the next video.